In a system that just ain't right, gonna tear it down, gonna start a fight. Anarchy and numbers is my game. I'm the investor with no shame. Greed and corruption, that's the name of the game they play. It's all a shame. I won't play by their rules, I won't comply. Anarchy's the way. It's time to fly. I'll burn down the walls and break the chains, shatter the...
And here we go. Welcome. I am Matt. This is the Anarchist Investor live, coming at you every Monday through Friday at 12 Eastern, talking about contrarian investments, markets, the economy, how to protect and grow your money and keep it safe from some dirty banksters. So a reminder, help me out with the algorithm. A little thumbs up, a little subscribe, a little follow, a little share will go a long way towards helping out the channel, as well as helping this information get in front of the most number of people possible so it can help them, or at least hopefully help them. So I'm going to pull down the banner. And guess what, folks? Party's still going. Hey, everyone, drinks, shots all around. Let's go. The Wall Street casino is hopping. Actually, interestingly enough, NVIDIA is hopping. The pin action, to steal a Kramerism, isn't what you would think it would be. You would think that this would cause just a ridiculous amount of euphoria, right? Like throughout the entire marketplace. NVIDIA, everyone's been waiting with bated breath. Were they actually going to deliver on their numbers? As I've talked about in the past, and as a number of people have talked about, if you watch Nobody Special Finance, he did 2 videos on this. NVIDIA's got its own little kind of Ponzi scheme going, where they create shell companies and then use those shell companies to put in orders for their own products, which then juices the numbers because they get a multiplier based off of those orders. And so they can turn $1 billion into $100 billion very easily that way. Well, they continue to deliver, but the rest of the marketplace isn't really like hopping. I mean, we're like the casino's up. I'm looking at the indexes. I mean, NVIDIA's up 10%, right? The rest of the indexes, let's see, the S&P's up like a third. The Dow Jones is actually down right now. The NASDAQ is up, as you would expect. Tech and semiconductor names are up, right? So the NASDAQ is up, but the Russell's down. So small caps are being sold off. So this is a very strange kind of reaction here. It almost feels like a feeling of relief, not exactly exuberance, like we're going to continue going here. It's almost like everyone was just kind of holding their breath on Wall Street, waiting to see what NVIDIA was going to report. The number came out decent, and so they're buying NVIDIA, and that's about it, I guess. I don't know, like a couple of other related names, but I'm, again, granted, we're only, halfway through the casino trading day, so we'll see what happens throughout the afternoon. Could end up catching a bid later on today just because, I don't know, maybe a lot of people positioned money before this number and they're using the buying pressure early on here to lighten up and realize some profits. Who knows? But that being said, the casino's kind of like up to mixed, depending on where you're looking. The dollar is flattish. Again, not really like a huge reaction here. Like it fell off, then it popped back up again. Net on net didn't really go anywhere. Oil is down slightly. And that's after a big pop. So like a run up and then a sell off in oil. So it hasn't really moved anywhere considerably within the last 24 to 48 hours. Gasoline is just down slightly. Copper is down slightly. Lumber is up slightly. Gold and silver continue. This is the story here that I'm really most interested in. Again, silver goes up, hits, let's see, we topped out at roughly 32.72, give or take a couple of pennies an ounce, or actually 32.76, give or take a couple of pennies. And we have since sold all the way back down And look at that. We came down to like $30.36. We might even see a little bit more downward pressure with silver. And like I said, what I wanted to see was this nice break of $30. I wanted to see silver come back and retest that 30 and make certain that this 30 is going to hold before it moves higher, right? Otherwise, it's just a trap, right? It's just a way of inducing liquidity into silver. And then, the manipulative trading desks take over once again. Excuse me. But so, yeah, we're waiting to see silver, and gold is pulling back as well at the same time. Now, interestingly enough, gold had this resistance line over the top of it that was hovering just under 2,400 an ounce. It broke it to the upside and has since violated it to the downside. So we're going to have to see what happens with gold moving forward. A lot's going to be based off of the economic numbers moving forward. And like I said, right now, it just seems like everyone's collectively taking a deep breath that NVIDIA didn't drop the ball. So the Ponzi scheme is alive and well in NVIDIA. It's still working for him. All right, let's look at fixed income really quickly. Today's going to be a relatively quick episode because, again, there's just not like a ton happening today. There's some stuff coming up here next week that is of note. But yeah, it's not really like a huge movement kind of day just yet anyway. There are, like I said, there's like a mixed picture here too, though. So despite the strength and say like tech stocks and stuff like that, high yield bonds are trading down a bit today. So that's like a contrarian kind of indicator right there. Again, high yield bonds are typically, they typically lead the parade. And so when they're going up, either at the same time or in short order afterward, you see other risk assets move higher. Well, high yield bonds are actually trading lower. And again, another contrary kind of situation, you also see U.S. Treasuries selling off, meaning yields are back up again. Now, some of this might have to do with yesterday, like the notes, the minutes from the last Federal Reserve meeting were released. And there was actually they always focus on like one line that comes out of it. And it could be completely minor, or it could be actually be, something that's of significance. The one line that they focused on yesterday was that some of the Fed governors would be okay raising rates if they had to in order to finally slay the inflation dragon. Something of note is those minutes come obviously well after the meeting and the actual decision on rates. And then there's a bunch of economic numbers that come after that. And so it's entirely possible that those minutes could be actually more often than not, those minutes are outdated. Right? They're looking backward. Like the world could be completely different today than it was back then. And in fact, it usually is. And so in that situation, is the Fed really going to raise rates? I don't know. Apparently in the U.S. Treasury market, they feel like rates are going to stay higher still. So I'll continue to watch this. I still think rates are going lower because I think the Federal Reserve is going to be forced into cutting, because I think the economic numbers are just, they're holding on, right? Like they're holding on to the edge of the cliff just by their fingertips. The economy is, and one just little breeze or flick is going to send the economy off the cliff. What that will be, we don't know just yet, but there's all kinds of candidates out there. And it's entirely possible that things are just so bad, it'll just roll over and kill itself because of what they've constructed here. There's a very precarious economy at play right now. And we've seen it played out in so many other evolved, or not, the word isn't evolved, mature economies throughout the world, right? You've seen Europe go into deep recession. You're seeing China right now be in a recession like atmosphere, despite the fact that maybe the GDP numbers haven't necessarily gone completely negative for enough quarters in a row, but definitely feels like from a real estate perspective and a consumer spending perspective over in China, they're in a recession. So you're seeing a lot of these, mature economies fall into recession. The fact that the United States hasn't yet is, I would call it an anomaly if it never happens. But I'm certain it's going to happen. So it's not necessarily an anomaly. It's just like the fuse on the bomb is longer here in the United States than it has been for other countries around the world to kind of deal with a lot of this fallout. So we're just kind of waiting for that bomb to go off. And, high yield bonds are like, could go off soon. So we'll see what happens. HYG has pulled away from this resistance level that's sitting over the top of it. Tried that level twice recently within the last couple of days, last couple of weeks, actually. No, sorry, last couple of days. And it's been rejected from that line twice. And so now it's heading back down to the bottom end of this consolidation range. And in fact, this is like a larger wedge pattern here. It may visit the bottom end of the wedge as well, which presents a possibility that it breaks the bottom end of the wedge and moves lower, which would be a risk-off signal, which would probably coincide with rate cuts by the Federal Reserve because of the economic numbers. All right, we're going to finish up with crypto here. Like I said, short one today, not a long one. Yesterday I had a really long diatribe. In fact, if you missed the video yesterday, go back and check it out. And a reminder that you should subscribe to the Anarchist Investor Substack. So it's anarchistinvestor.substack.com, because on the 3rd, I'm giving away 4 annual paid memberships to the Substack. And today I put out part 4 of my 5-part financial crisis survival playbook. And today was basic investment, essentially the most basic of investments, cash management, safety fund, that kind of stuff. Tomorrow, I'm going to be putting out the 5th part, and that will be for the actual, like, okay, if you have some extra money to put to work during the financial crisis, how do you make sure that you're putting it to work in a way that's going to make you wealthier over time? Billionaires are more so made during times of turmoil, financial turmoil, than during good times. So that's something to remember. Not that everyone wants to become a billionaire, but just an anecdotal piece of evidence there. So looking at crypto, Bitcoin is weak today, despite the fact that Ethereum is continuing to trade higher off of this momentum from the ETF news. Bitcoin's taking a little bit of a step back today. The crypto space is not as weak as Bitcoin is today, and a lot of that is because Ethereum is positive and holding up most of the weight there. But yeah, Bitcoin has fallen back through the 69,000 level. So like I said, once we pop through, I wanted to see come back and see whether or not it was going to hold the 69,000 level. Now, this is also a quandary of mine. Nvidia is trading higher. The NASDAQ is higher, but it doesn't seem to be higher as much as I thought it would be with Nvidia being up 10%. Okay. So there's a huge possibility here that you're getting this huge pop in Nvidia, and just the rest of the marketplace is just so awful that Nvidia is just like Nvidia is the best looking house on the block. But eventually Nvidia is going to succumb to the same pressures that everyone else is hurting from right now. And so it's entirely possible that, you get this pop in Nvidia, but not all the rest of the tech names go with it. And then it resumes kind of like the weakness that we saw leading into the last Fed meeting. And I would have expected Bitcoin to go with Nvidia. But again, it's not just Nvidia, it's the broader tech sector in general. And so Bitcoin's selling down a little bit today. Again, it's a lot of time left in the trading day. So that could all reverse and Bitcoin could be back up a couple of percentage points by the end of the day. Who knows? But my expectation here was off. My thought process, and I was right in the morning, off of the start, like from early this morning. So I started looking at the charts about 6 o'clock this morning. Bitcoin was up like over a percentage point. Now it's down almost 2. In fact, at some point it was down more than 2%, I believe. And but off the start, it looked good. Now it's kind of reversed course. But that being said, it also, you've seen some of that reversal in the stock market as well, right? S&P pops, pulls back. Even the NASDAQ, which these quotes are delayed, popped, it's pulled back, right? So you've seen that strength off the open, but then selling pressure. So again, could this just be an exit point for a lot of big money? It's entirely possible. I've seen some other indicators that show that a lot of the quote unquote smart money is buying here. But again, some of those numbers are skewed, or at least they're not skewed, they're late, right? So you don't really get reported on that number on a day-to-day basis. Those numbers can be delayed a little bit. And so they might have been buying in pre-NVIDIA earnings, right? And then expecting this kind of pop. You could be getting exit liquidity right now for the big money. And that's why you're getting this kind of rip and then sell off that happened afterward. We'll have to see in the coming days whether or not there's any continued momentum moving forward. But like I said, there's some really contrarian things that are happening right now. A lot of the crypto space is negative, along with Bitcoin. And like I said, Ethereum's kind of holding things up right now. Not like a huge number of like movements of note here. If you missed it last night, Aaron Day on his channel, on his podcast, he talked about central bank digital currencies and kind of his call to arms here, because he feels like there is basically crypto has fallen behind. Being enamored with the shiny returns of Bitcoin and the projected wealth that comes from that, or gains in wealth, has kind of taken the attention away from what really was the original intent of crypto. And the ways that crypto has essentially been either one, hijacked, or two, bypassed by the centralized technology that was languishing behind, and now it has since leapfrogged crypto. And one of those things that's leapfrogging crypto is central bank digital currencies. And I'm not sure how closely you follow the narrative with CBDCs, but for the most part, there are some people that are saying the quiet part out loud. And the quiet part out loud is that it's going to give central planners and regulatory authorities and all the people that sit at the top of the pyramid, or all of the cooks that continue to turn the temperature up on the cauldron with all of us crabs in it, gives them more control, gives them more oversight, and thus more control over the way that money is spent, how it flows. And it is really unnerving that it is attached to carbon credits. And so it is married with this, climate change narrative, this ESG kind of narrative that's been pervasive for a long time now within politics and our society and culture and everything like that. So if you didn't see it, the audio is a little wonky, so you have to get through that. But Aaron Day did, it was like 2 hours. He did like a 2-hour podcast last night, and he walks you through all of that. He walks you through the precursor, his thought process, the setup of where crypto was, what happened to it, where it is now, and the call to arms at the end for, this kind of Manhattan Project kind of initiative that he's trying to put together in order to get more adoption of crypto, and specifically crypto that is not overseen or directly, controlled and managed by, regulators and authoritarian types. Something that is truly decentralized, or at the very least not centralized, right? I do think I have to start drawing a distinction between those two after talking with Patrick Smith, which, by the way, another reason to be subscribed, especially if you're subscribed on, YouTube and Rumble and that kind of thing, is you will get a notification that later today, about 5 p.m. Eastern, I'm going to be releasing the second part of that interview with Patrick Smith. And then next week, I will have the edited interview with Vinny Barbosa. And we talked about Nano. We also talked about the general state of the crypto market and things that he's writing about over at Finbold. So some really good stuff coming up. So with that, that's really all I have as far as like market coverage today. I wish there was more going on. There's probably some other stories that I'm glossing over, but again, I'm really kind of watching the price action here, and it's dare I say, like, I don't want to, again, I don't try and give people trading advice, right? But I'm inclined to think that this is like a rip, and then we're almost kind of a pump and dump. Like it feels like it. Now, that being said, you're not exactly seeing it in Nvidia, right? Nvidia ripped, looked for a minute like it was going to start to sell off, and now it's continued higher. But again, there's this huge disparity where it's like there's only a handful of names that are really moving higher off of Nvidia's earnings number. And then there's a lot of stuff that's down, right? Including things like Bitcoin and the crypto marketplace. So, and high yield bonds. So this is really kind of strange. It's it seems like a lot of people are raising cash, and I don't know why. I don't know if it's because they're going to then rotate into other areas of the market, expecting there to be a further run here. Typically, here's the other thing you have to remember: the seasonality within the casino specifically is that during the summer, whatever the trend was leading in the summer, usually it continues. So a lot of times if you had a halfway decent first half of the year through June, the end of June, July and August just seems to kind of like continue to gravitate higher. The same thing goes for the downside. If you have a really disappointing first 6 months, a lot of times you're sideways to down during the summer. A lot of vacations. There's not a lot of, Federal Reserve activity because they take essentially the equivalent of 2 months off. You don't get a lot of interviews. It's like a very dead time during the market. And those dead times means that the market just kind of defaults to that kind of like either up and right or down and right based off of the first 6 months of the year. So it's entirely possible that we just see, cash raised here and then it put back to work to just continue to kind of push this thing slowly but surely up the mountain until eventually we get that downward move. I'm continuing to watch. Actually, if you look at a longer term chart here on NVIDIA, okay, obviously with a 10% move being near all-time highs, we're now at new all-time highs, right? But what I am continuing to watch is this relative strength reading, because we put in what used to be the old all-time high in March, right? We've had a couple of months of pullback, and now we're putting in the new all-time high. But as of right now, the relative strength is lower than it was when we put in the all-time high a couple of months ago. So if we do end up having some kind of course correction here at the top where, this buying pressure fizzles out here or tomorrow, and then all of a sudden we get a lot of people taking profit, this could be a major turning point for NVIDIA. I thought that what happened back in March could have been it. And if you notice, kind of the same dynamic played out. You got a secondary high here, a secondary all-time high on lower relative strength. And that's what caused this kind of like near-term pullback in NVIDIA. I mean, same thing could have happened again. You could get this high actually being the ultimate high and then it turning around. But again, you can't tell that until it actually happens, right? I'm not predicting this. So that's the reason why I don't tell people to kind of like trade, especially not on what I'm talking about, because I'm more about longer term perspective than anything. But that being said, you could be seeing a lot of exit liquidity being added to things like NVIDIA right here, and a lot of smart money using this as an exit point rather than, a way to position itself. Who knows? We'll have to see what happens. Again, like I said, the summer could just be that kind of like, trickle higher kind of feeling in the market. So all remains to be seen. We also have to see what happens in June. I think June is a huge time period here before the summer, because June, I doubt the Federal Reserve is going to want to throw any curveballs. The only curveball I think they would want to throw would be a dovish one, not a bearish one. So we'll see what happens with that moving forward. But anyway, with that, that's really what I have for for today. Kind of a quiet day, but look, it's Thursday. We're almost to the end of the week. Tomorrow's Friday. I will be back here at noon tomorrow. And like I said, I got some huge interviews coming up. That the second half with the Patrick Smith interview drops tonight. So definitely be subbed and get the notifications. And yeah, that's all I got. So everyone have a fantastic Thursday afternoon. And I'll see you for a wonderful TGI Friday. Have a good one. Peace.
Stuck in a system that just ain't right. Gonna tear it down. Gonna start a fight. Anarchy and numbers is my game. I'm the investor with no shame. Greed and corruption, that's the name of the game they play. It's all a shame. I won't play by their rules. I won't comply. Anarchy's the way. It's time to fly. with my rebellious spirit. Watch me grow.